It's time, ladies and gentlemen, to go over the infamously wrong. Ladies and gentlemen, it is time again to go over the infamously incorrect AMC price prediction for this week. I like to do this because I think it's fun and I think you guys need to be educated on what's going on in our markets and how it can move AMC and our broad markets, right? Economic data, earnings, Fed speakers, what's going to be happening in general, and what you need to be watching out for. So at the bare minimum, at least you will be more educated after watching this video. Even if we are completely wrong on ultimately what happens with AMC stock. First off, I think it's important to know that we're not really set up in a great way heading into this week. Now, we're going to get some earnings, we're going to get some economic data, some Fed speakers, but things are about as good as they're going to get for our markets. Now, I don't want to be the guy that is predicting the doom and gloom kind of crash. I don't think we will see a full-on crash. Could we see a correction? Obviously. Would that happen all this week? Obviously not. But you could see the start of what could be a correction in this upcoming week. And the simple fact is, if you look at the SPY, it hit a new all-time high on Friday. Now, as we get into earnings expectations by the markets are for 11% EPS growth for the S&P 500. There's probably going to be a decent amount of sell first, ask questions later, and individuals will take some profits off of, stocks that they have made money on over the past couple of weeks, maybe the last couple of months. And just in preparation or just in case, those stocks do not perform well. One of the worst things to do is see, a stock maybe you're up 30% on or 20% on, you head into earnings season and all of that gain gets destroyed, right? That's not great if you're a hedge fund institution trying to report profits back to your investors. So that's definitely something to consider just as we get closer to earnings season and as we really get into earnings season. Now, there will be some earnings, not huge important ones, but some earnings nonetheless. Some of these will be somewhat important though. Don't let me underscore them. On Tuesday, and if you guys didn't notice, today markets are not trading, so there's no earnings, and that's why AMC stock is flat and not in the red. You do have Goldman Sachs and Morgan Stanley as well as PNC reporting earnings Tuesday morning, so tomorrow morning. A bunch of different banks throughout this week, but then you will have Interactive Brokers Tuesday and after hours. You will have Charles Schwab Wednesday pre-market, and Discover, Alcoa, Kinder Morgan Wednesday after hours. Discover is going to be a very critically important one because about 5% of all credit cards with Discover are delinquent right now. So if that gets worse, that's not going to be great, okay? That's not going to be great at all. And Discover is probably the lower tier credit card provider. Not necessarily lower tier like as in a company, but they give out starter credit cards to basically everyone, right? I know some people that have fallen on harder times and, maybe that's a justification and just spent the money on the credit card and have yet to pay it back. I'm obviously not going to name any names, but I personally know a person or two that has done that over this Christmas season. And that's definitely going on their delinquency books for Discover. And I can only imagine what that situation might look like coming after Christmas. We're going to get some clarity from Discover, potentially how credit cards were used, if there is more delinquencies, if people maxed out credit cards, or just how things went over the holiday shopping season. Potentially could be an interesting short, and I might be making a trade on that one. So stay tuned for that. Thursday, pre-market, TSMC will report earnings. This is Taiwan Semiconductors, and that could obviously be important because Taiwan Semiconductors does a lot of manufacturing for a lot of other companies, including Apple. So depending on what their numbers say, it could have broader implications for the entire semiconductor market. PPG and JB Hunt, as well as the Bank of Ozark, Independent Bank, and First National Bank will be reporting earnings Thursday after hours as well. And then you have Ally Bank Friday pre-market, and State Street, Comerica as well. Comerica and Ally not really doing so great, so definitely want to watch those ones. And Fifth Third Bank as well will be reporting earnings. Ally is seeing some of the highest default rates there is in the banking sector, so that's definitely one with a big risk on its back, so want to be watching out for that one. That is for sure. Now, as we went over in the last video, the latest AI investor sentiment survey, I don't know how this is correct, but 48.6% of investors are bullish, 27.2% are neutral, and 24.2% are bearish. And I expect that bearish number could pick up quite a bit in this upcoming week. Now, also, as I said in the last video, typically during an election year, you do tend to see a sideways, if not down market for the first 3-4-ish months or so. The middle of the year tends to see a rally, a steeper crash towards the elections, and then quite a rally after that, because let's be honest, markets don't care if you know, young Biden or young Trump make the presidency, right? Nobody gives a crap. The markets don't care. Let's just be honest. Let's establish that right now, while we still have 10 months until the election itself. Markets don't care about that. If you think they do, you're wrong. Markets typically rally after there's clarity on who's going to win. And believe it or not, markets might actually rally more if, well, I don't want to say more, but markets might potentially like either one here, because we kind of already know what to expect with young Biden. We already kind of know what to expect with Trump. So I don't think there's going to be, too many negative implications to either one that does ultimately win. So yeah, that's just my personal opinion. I want to let you guys know 10 months early, so there is full clarity out there. Now, let's get into the earnings calendar. So the earnings calendar for this week: on Monday, nothing. Stocks are closed. On Tuesday, New York Empire State Manufacturing Index. That will be one that people watch, because manufacturing has been in a recession for like 2 years now, and you're expecting another about -5 print here. And most of the prints we have seen over the past 2 years have been very negative. You will also get Fed Waller that speaks at 11 o'clock in the morning. You do have some housing data and inflation data out of Canada. Probably not going to be very important, probably at all. NOPA crush report will come out as well, and then you get some data out of China later at night. GDP growth rate year over year, industrial production year over year, fixed asset investments year to date. That's something that's interesting, because you have now started to see the first outflows from Chinese securities for the first time in history. Yeah, people are pulling their money out of China more than they are investing their money into China. Very negative. If you are the Chinese government, you're watching that and saying, dang, that's really pushing our plans back to becoming the largest country in the world as far as GDP is concerned. So yeah, definitely want to be watching that. Wednesday, this is probably your biggest data of the week. You are going to get retail sales month over month for December. That comes out at 8:30 in the morning. Now, this is an interesting one, because retail sales, some people, like, you may or may not know how important this is, but about 70% of GDP is comprised of consumers spending money. So retail sales is the retail side of that. It doesn't have to do as much with like services, but retail sales, people buying things. If that's strong, GDP is likely to be strong, or at least okay. If retail sales are bad, well, that's going to be a hit for growth, right? That's not going to be a great sign for the December time and potentially Q4 GDP. You do see retail sales come in low. Well, that's going to be a bit of a problem for our markets. Now, coming out at 8:30 in the morning on Wednesday, retail sales, you're expecting a 0.4% month over month reading. If that comes in light, like 0.2%, markets are probably not going to love that, right? this is not 2022 where you want to see a weak economy. You want to see a strong economy. You want to see an economy thriving and avoiding a recession at all costs. So that will be important. Some other data that will be coming out: export, import prices, retail sales excluding autos, export prices year over year, import prices year over year, retail sales year over year, all kinds of other different data points. The red book year over year as well. Now, starting at 9 o'clock through 9:15, you're going to get Fed Barr, Fed Bowman, and Fed Woods that will be speaking. So 3 Fed speakers there. Manufacturing production month over month and year over year, business inventories, retail inventories excluding autos, industrial production year over year, capacity utilization, all kinds of different data will be coming out Wednesday. This is more softer, kind of smaller data, but still collectively, if it tells you either the economy is doing well or the economy is not doing well, that's what I will be paying attention to. Not just one single data point, retail sales month over month obviously being a huge one, but if all of the data kind of points in one direction or the other, that's what I'm going to be paying attention to. But if it's kind of here or there, some's good, some's bad, I don't think the markets will react too much to it. Fed Williams will be speaking at 3 p.m. as well. And you will get the Fed Beige Book. That is basically a report of how the districts are doing. So like the Minneapolis Fed covers Minneapolis, North Dakota, South Dakota. It covers the Upper Peninsula of Michigan. It covers different areas. And it's basically a report, and that's just for an example, of how the Fed is seeing their districts performing. And we get one of those every month or so. So that'll be important to watch as well. Typically does not move the markets, but we'll see. 8:30 in the morning on Thursday, building permits for December will be coming out, expecting an increase to 1.448 million from 1.46 million last month. And building permits, you know, it's a sign of maybe how many buildings are going to be built, especially when it comes to housing. We have housing inflation because there's one, you can make an argument because the Fed has raised rates and caused housing to be so expensive, right? That's a direct cause to the Fed raising rates, and in my personal opinion. But again, there's a housing shortage out there, just a systemic housing shortage that, you know, there's just a lot of people and not enough houses. So that's another part of it. We definitely want to see building increase. You will get initial jobless claims as well coming out for January 13th, the week ending January 13th, 8:30 in the morning on Thursday. Philadelphia Fed Manufacturing Index expected at -7 on Thursday as well. Let's see, Philly Fed business conditions, CapEx index, employment, new orders, prices paid. All of that will be important as well, coming out 8:30 in the morning. And then ECB President Lagarde will be speaking. That is like Europe's Fed Jerome Powell. So want to be watching that as well. Fed Bostic at 11:30 on Thursday, and then again at 12:05 on Thursday, and then a 10-year tip auction. Want to be watching that also. And then the Japanese inflation rate year over year. Surprisingly, some people are expecting the first rate cut in like 16 years, or rate increase in like 16 years in Japan. So if that does happen, that could have implications for our markets as well. Now on Friday, Michigan Consumer Sentiment Survey will be coming out. The biggest thing to be watching here is inflation expectations for the 1 year and the 5 year ahead, right? 5 year inflation expectations recently have jumped quite a bit to 3.1%. 1 year inflation expectations have stayed pretty much the same. Around about, I had that backwards. So 1 year inflation expectations are around 3.1%. 5 year inflation expectations are around 2.9%. If you see those fall, especially the 5 year inflation expectations, that's going to be fantastic news. And then on Friday, Fed Daily will be speaking as well at 4:15 p.m. So quite a bit of data, not your GDP data, not your inflation data, but pretty important data nonetheless. Retail sales, Michigan consumer sentiment, a lot of softer data, right? Manufacturing data across the board, import prices, export prices, lots of Fed speakers. So it's going to be volatile just looking at the calendar here in and of itself. So those are really the two things that are going to be happening today, right? Or over this week. That's two things we're talking about here in this video today that will move our markets for this week. Specifically, earnings, I think, will be the biggest driver of stocks over the next couple of weeks. But some of these earnings we have this week are just not that important unless we get something that is just, crazy, like Discover's credit delinquency rates spiked, or TSMC is really slowing down, something along those lines. I'm not exactly forecasting that, so I think this week might be more so about the data than about anything else. Now, what all of this will do is it will fluctuate the odds of a rate cut in March. Currently, the expectation is 70.6% that we will get a rate cut in March, 27.1% odds that we will get a continued pause in March, and a 2.2% chance that we'll get 2 rate cuts by March. And that's really not going to happen, 2 rate cuts by March. So the question is, do we continue to price in a rate cut in March? If we start to unprice in a rate cut, if the odds start to fall, well, does the market start to fall? Are the markets trading on the narrative of we get the first rate cut in March or not? Probably, at least to a certain extent. The other thing we want to be watching for is the probability for Fed policy. So currently, we're pricing in 1, 2, 3, 4, 5, 6, 7 rate cuts for 2024. We want to see if the odds go higher for 7, if the odds go higher for 8, or if you start to go back to pricing in 6, hopefully even 5 rate cuts. Because as of right now, I think there's a big danger here over the next couple of weeks. We talked about this in the last video that was put out here on the channel, but we have the next Fed meeting on January 31st. If markets are still pricing in 7 or 8 rate cuts by the end of 2024, that would be a rate cut pretty much at every single Fed meeting if you have 7 rate cuts after March. The Fed is going to say, heck no, that's not going to happen. We're probably not even going to cut rates in March unless something were to dramatically change, unless inflation were to really plummet or the economy started looking really bad. So either way, I think you're going to get some pushback from the Fed January 31st. Now that week, the week of January 31st, you're also going to be getting Apple earnings, Google earnings, Microsoft earnings, Amazon earnings, all of your big tech, vast majority of the markets will report earnings this week as well. So if earnings wasn't enough, you also have Fed Jerome Powell. So mix those two together, and the last week of January, the beginning 2 days of February, going to be very volatile. It looks like to me Apple is going to report earnings the day after the Fed. So I believe the Fed is going to be on Wednesday, January 31st, and then you get Apple on Thursday, and then Friday's going to be a crazy day nonetheless. So there you have all of that. Now, a brief run through of what the data looks like here for AMC stock on here today for this upcoming week. On the call side, you have 63.9% open interest. On the put side, 36.1% open interest. So about a 2-to-1 ratio for, calls compared to puts. And we'll see how the option activity does perform this week from hedge funds and institutions. Over the past week, it's only been 17% positive. So it's been pretty rough. Not very good from hedge funds or institutions. Short interest percentage of free float recently has jumped. I think this will probably continue to move higher at 9.26%, $106 million worth of short positions, 1.18 days to cover, 23.2 million shares currently out on loan or currently sold short, 17.97 million shares currently out on loan, cost to borrow fee 1.08%, utilization of 29.19%, and a short score of 54.12 out of 100. Now, let's get more so specifically into what's going to be happening with AMC stock this week. Guys, it's not looking so good, okay? So this week, a lot of Fed speakers, they're going to push back on the narrative of rate cuts. That's obvious. That's going to be a headwind to our markets. Potentially earnings could be another headwind to our markets. I'm not exactly super bullish about this earnings season. So I'm not exactly super bullish on all of your regional banks and Discover and TSMC. I'm just not that bullish on earnings in general. So from my perspective, this week could be quite negative. I don't think it's the week that is the really bad week, though. I think that is going to be the following week and then the week after that. But I think it's justifiable to say, since stocks like SPY is trading at an RSI of 65.41, not technically overbought, but pretty close to it, and you're at all-time highs, you could see some pullback here in our markets. Now, pullback here in our markets is like pullback for AMC. If the markets pull back, AMC really pulls back. I would not be surprised if that does happen this week. Now, I would also not be surprised if AMC stock kind of just trades sideways here around $4.50. I'm not expecting large upside this week. I'm just not. Unless there is something that is really good news, like AMC is no longer diluting shareholders, something along those lines, then that's a different story. Then you could see some larger upside. But in a best case scenario, like absolutely best case scenario for this week, I would expect around $5 per share, like which is very, very little from here. Let's see. Percentage change, $5 per share would be about 10%. So I guess it's not too bad. My more so base case is probably around $4 per share. That would be a drop of about 11.5%, just because I do think there is weakness coming here in our markets. And I don't know if Adam Aron is going to give us that commitment that he will not be diluting shareholders. And unfortunately, there's a dark cloud hanging over AMC until Adam Aron says he will not dilute shareholders. AMC stock will just be very susceptible and vulnerable to the next round of dilution, in which the markets are constantly going to be looking ahead to that and constantly pricing that in. And that's why AMC stock has been falling. It's not necessarily AMC has been doing poorly, right? Last earnings were very good. We just got dilution, and now it looks like we might get more dilution. So that's a big problem. I don't know what gets us out of this rut, but I don't think it's going to be this week, and I don't think the markets are going to be here to help us this week. That might not happen until the second half of 2024, unfortunately. So let me know what you think about this information down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.